Before we get started, I want to explain to you a short overview of what Master Trader Strategies is about and the way we educate here at Master Trader. First thing we do is define individual concepts of technical analysis. What's an individual concept? I'll explain that in a second. And we're going to define what's not to be used and why. We're going to define and understand each individual concept. So each lesson that we go over here at Master Trader will be about individual concepts, understanding how to use it, and then we're going to tell you how to interpret each individual concept. And once you become a student, our education is followed up with monthly coaching on an ongoing basis for life. Now, you have to practice what you learn, trading small, even on a paper account, and then developing consistency in following the approach. Part of our education is to teach you about changing market environments and how to adapt to them. So through experience and repetition of education, that is what leads to the mastery. Individual concepts. At Master Trader, we say price is king. Everything else is secondary. We don't use indicators. It's all about price analysis. We will do lessons on moving averages, which we use, but we do not use indicators. We look at prices in a candlestick format. Why? It's just easier to see the pictures. We are picture traders. That's the essence of what we do. We look at pictures. We look at those pictures within trends. Are they going up, down, and sideways? We look at them in multiple time frames, support and resistance. In some lessons we'll talk about volume, which is secondary. You will be part of the volume. In the moment of the trade, price will tell you when to act. We'll be talking about broader markets and their trend to give us a bias as to what's happening. Why? Because most stocks are going to be influenced on what's happening in the broader markets. Market internals and intermarket analysis combined with technical analysis is what we call a three-legged stool, or technical fundamentals. And position and money management. Without that, none of this matters, because if you don't have position and money management, you're not managing your business of trading. And just like any business, the trading business, maybe more than others, requires money management, because if you can't last in this game, you won't make it. Let's go. Hello, Master Trader subscribers. I'm making a video to answer a question to one of our subscribers. And I could answer it in a very simplistic way from one time frame, but I thought I'd make a video and explaining the concept in different time frames. They add a little bit more education to it and understanding of the concept. So it was questioned that they were watching a video on the website, and they said that I stated that retracements in a downtrend back to major resistance puts the trend into question. And he asked, is it the same with major support in an uptrend and a pullback? I would say yes, of course. All concepts are universal, and from the downtrend to uptrend, essentially, you're just turning the chart upside down. But let's take a look at this. Real time, what's happening in the markets right now. It's a down day in the market on the 5-minute chart, and you can see the different time frames here, which I'll point out. One second, get my drawing tool out here. And first of all, you have to define a downtrend and an uptrend. Downtrend, simply lower highs and lower lows. What is a high? What is a low? The way we define it is to define what a swing is, or a pivot, and you see these dots. And it's pretty simple. Almost any software platform will do it, where you just tell it, show me a bar that has 3 high or low bars to the left and right, mark it as a low pivot, and a high pivot, show me a bar that has 3 lower high bars to the left and right as a high pivot. Now, as it makes pivots or swings, does it continue to make lower highs and lower lows? And as we look at this 5-minute chart, you would say, yes, absolutely. It's making lower highs and lower lows on a 5-minute chart, and it's doing it on the S&P 500. It is doing it on the NASDAQ 100, the QQQ, and it is also doing it on the Russell 2000. We watch these 3 major market indices throughout the day, either to trade them or just to find the market environment on the day. Now, retracements. What is major resistance? Well, we define it as the high prior to the lower low. I've already told you how to define a high and a low. Now this began to accelerate lower, so maybe this is the end of this downtrend in the short term. We don't know yet. However, his question was, if it retraces back to major resistance, does it put the trend in question? And I said yes. Now here we see on the Qs it retraced, well, let's just eyeball it and say about 80%. So it's getting close to a deep retracement. And it's really common sense when you think about it. If something's in a downtrend and prices retrace all the way back up to the prior area that it fell from, that displayed strength. And whereas we look at that on the S&P 500, it could retrace quite a bit less. And it began to turn at that point. How are you going to sell it short? It at least has to make a turn. We have to look to the left to see, is it at support yet? Does it have room to fall? So without looking there, we'll just assume that it did. It kept falling. And we haven't even gotten into what's happening on the daily chart. We're just following the concept of, if it's in a downtrend and it retraces to major resistance, does it put the trend in question? Answer yes. That doesn't mean you act on anything. When Dan and I do MT Live, we start with a slide with a list of concepts, and we say one concept is not a trading strategy. We have to put them together. So what do you do from that point where it makes that deep retracement? Well, if it retraces all the way up there, now we have to see what the reaction is to that resistance. Does it go sideways? If we apply bar by bar candlestick analysis, does it dip down and flip right back up again, showing us that buyers are lurking below and there's strong demand? And then at that point it leads to, should we consider buying a breakout? If it continues to move down, well, it's doing that, it's continuing lower, and now we just continue the process. And now if this pulls back to the support area and it has a deep retracement, well, let me back up a second. You're going to need 3 bars, right? Let's assume this is going to be the pivot bar, and we get 3 bars, and it pulls back here. And now it retraces all the way back up to that swing high or pivot, major resistance. This downtrend likely is over at that point. And can it go sideways? Can it start a new uptrend? What's happening in multiple time frames? So you should have that part of it down. Simple. Now let's look at Apple. And we're looking at this in multiple time frames. You can see the daily chart. It is making higher highs and higher lows. This is major support. And we have a swing here. It's starting to go sideways. Why is it going sideways at this point? Well, there's some distribution, it's tired, it gapped up. Could be a multitude of reasons. Primarily, we're going to look into the left here and see that it's over at an area of resistance. It's pretty much reached its destination. However, it's retraced 100% at that point. And strength, it hasn't taken it out, but it's 100% retracement. And we consider buying pullbacks in this time frame. Now, how far does it pull back? Ideally, it goes sideways here. What if it breaks major support and trades under these lows? It's no longer in an uptrend here, but it is in an uptrend here, and it would require a deep retracement all the way back down to major support to put the trend in question on the weekly time frame. So what we would look for is a pullback, maybe into this area here around 160, give or take. There's some pivots here. And now we begin to reverse the whole process. We have a bullish view on this time frame. It's extended, it should pull back. It pulls back somewhere into this area, and it is making, let's just say, lower highs and lower lows. Let's clean this up and go back here. Let's say this breaks here and it's making lower highs and lower lows. Pivots, and it makes a deep retracement and a pullback, and now a retest pattern, and it begins to form a bottom with this bullish view on this higher time frame, and at that point maybe it could resume. So there you have it. This is how we use these swing highs and swing lows and deep retracements, forming a bias, looking where next buy setup would be, and it's showing you the hourly chart here, what's happening intraday. It's just in a sideways trend. It was a pullback here, downtrend on the intraday time frame, but that's a whole another strategy coming into place as an intraday trader. Now this is retraced back to the bottom here. This downtrend is likely to be over in the short term, but it isn't in the long yet. I hope that helps. If you have any questions, email me, Greg at